Hey everybody, so I got a couple trades to go over with you this morning. And so we're going to start with USD CHF. We're going to break that down. So I posted both of these pairs, USD CHF and AUD USD, both in my free Discord chat. So you can see right here I posted USD CHF. I said that would be a bit aggressive, which it was a bit aggressive, but big swing level inside fair value gap, could find resistance there. And if something is very bearish, typically you won't see a very large retracement most of the time. Obviously, if something's really bearish, then it doesn't really like to pull back that much. It just keeps selling off. It'll have a little retracement, but it usually won't be something too extreme. And I'll go over in this video as well why I was a bit aggressive on it, and I figured we probably weren't going to get that big of a retracement. So let's see how it reacts on that level. Also 20 level in there. So if you watched my support resistance video, you know 20 is an institutional price level. So other institutional price levels being the 0, 20 like I got here, and then we got 50 and 80. Those are institutional price levels where you'll see in many cases price will respect those particular price levels. And then I also posted this. That is AUD USD. So you can see we snatched previous day's liquidity, boom, get a shift in structure, move up higher, fair value gap created, and I made this little line up here indicating that I think we are headed toward this to take out Hive day buy side and to come up into that imbalance. So that was my thought behind it, but we're going to break it down in more detail here. And that was the result for today. So $41,879. Okay, so let's break them down. And by the way, link to that chat's going to be in the video description. 100% free. You don't got to pay anything to get in there. It'll be in the video description. Okay. All right. So USD CHF. Let's start with this one. So what are we looking at here on the daily chart since this was a short play? Well, the market structure for USD CHF is what? Clearly it is bearish. We're operating within a bearish market structure on this. Okay, so we're trading with the overall trend, which is nice. And just by doing that alone, just by trading with the overall trend on something, you increase your odds of success dramatically. Okay, so we're trading with bearish market structure here. And when did it make that switch to bearish? Right here, we came down, boom, we broke that swing low, we pulled up higher, back up into a daily premium, we put in a swing high level, and then it was 100% confirmed at that point. So, and yep, that was the reason. And so we're trading with the daily trend. That's really all I needed to do there. Now the 4 hour, we can see it was actually down in a 4 hour discount when I shorted it. But again, like I said, I believed it was gonna start selling off pretty aggressively. So that was kind of why. And again, I'll go over here in a second why I was a bit aggressive on it, but it is in a 4 hour discount at that point because we took out this low right here. We took out that low right there. So we are in a discount marketplace, but still, what about the 4 hour? What's the story on this? Market structure bearish on the 4 hour as well. Okay. 1 hour chart, we can see this is clearly selling off to the downside pretty strong here. Market structure completely bearish, and this did pull back into a premium. So you take this swing high right here to the low. You see this, so it popped up right there. That's 50% equilibrium. It popped up into that and even gave you OTE or 61%. All right, let's go down to. So this is what I had marked in this is what I had marked in chat. So you can see right here. See this low right here? That's what I had marked, and it was inside of what? This is key. Because if you remember, for any of you that have really studied up and watched my playlist on my channel, you'll notice that this is a key level of resistance. Why? Because it's inside of a fair value gap. See that? See how that level right there, see that big swing level, that huge swing level right there was broken with a fair value gap created on the break. And when this occurs, as we know, these levels, many times they become very, very sensitive levels. Okay. Price respects them immensely. Okay. That was right at the beginning of that bearish fair value gap. Okay. And also something else was, you see right here, see this right here? What is that? I want you to really study that. Look at that. Let me use a trend line. See this? We had equal lows as well. Okay, so this is why I had that. This is why I said like it was an aggressive entry. I knew it was a little bit of an aggressive entry for me. But the fact that this had these really clean lows right here, and we were coming up into this level as well as an imbalance, I figured it was going to purge that pretty soon. That was the reason why I was aggressive, was I saw these really clean level like that. And when you got a really clean level like that, it usually does not take long for price to take it out, especially when you're operating or you're trading in the direction of the current market structure. And I mean, this thing is just clearly bearish on basically every time frame. So I figured that it was going to take out that level here pretty soon, which it did. That's those really clean lows. What is resting underneath of that level? Sell side liquidity, sell stops. That's what we wanted to attack, okay? So we had this again. That level is inside of a fair value gap. That is a level of resistance, okay? That previous liquidity pool, it's now a level of resistance inside the fair value gap, premium. And then we also have that 20 institutional price level. When you have all of that combined, when you have everything, because consider everything that I've told you so far, the fact that we're trading with the overall trend, the larger time frame trend, we have a clear level of resistance inside of an imbalance, okay? Inside of an imbalance, we have clean equal lows right below the price action, strongly trending lower. The momentum is clearly to the downside. That's a high probability trade, okay? That is 100% a high probability trade. And what ended up happening, it ended up coming up, and my stop was like right above that fair value gap right there. See that? Because we had it on the 15-minute as well. It was right above that fair value gap. At that point, if it was to break above that, I would have been clearly wrong on it, but it ended up coming up. It had this original move up into a premium right there, and then pulled back, and then we had another move higher, which actually, this is something new I've been learning. I believe that's what we would call an inducement, but don't quote me on that. I'm still learning that. But it came up, it took out that level right there, and then it pushed up into 61% retracement right here. Still good, nothing wrong with that. We're still clearly bearish. And then it came down and did what? It came down and attacked that sell side, okay? Now I sold down into the institutional level of 0.0, okay, because I figured it was going to stretch down to the 0.0. That's typically where price will find its support around. So it came down, it took out those clean lows, and then I took profits down into that institutional price level, okay? So that was USD CHF. I mean, just a really clean trade right there. Now let's pull up AUD USD. Okay, so I was bullish on AUD USD. This was a buy play. So AUD USD, what's this daily chart telling us? That it's clearly bullish. It's clearly trending in an upwards direction. The market structure is clearly bullish here. And it's consistently tagging previous day's highs, previous day's highs, previous day's highs, previous day's highs. So it's consistently grounded up higher. So I was indeed trading with the larger time frame trend on this. All right, so now we're on a 15-minute chart because this is where I posted the entry. And it is worth noting that AUD USD did recently put in a swing high level on the daily, which isn't ideal. I really don't like that. I like trading that strong upwards momentum. But with everything considered, still, it was still a good play overall. So I liked it. So basically what happened, where did I get that entry signal? So the entry signal came after we grabbed this liquidity right here. Okay, see how it grabbed previous day's lows right here. And if you watched my video on key liquidity pools, you know that's a key liquidity pool. Okay, and what I also say before, wait for liquidity or you'll be the liquidity, right? So there's that liquidity that we waited on. We waited it for to take out that liquidity right there. Boom, it takes out that liquidity, takes out those sell stops, and then boom, we get a nice move higher. Really nice, really strong, a lot of conviction, shift in structure. See how I broke that swing high right there? And it created a what? Well, actually right here as well, but this one and that one, it created a fair value gap on the shift. That's that confirmation after taking a key liquidity pull out, okay? And also consider everything that we've talked about so far, that we are trading with a larger time frame trend. And so we're looking good on that front as well. And let me draw this on a little bit better. There. So you can see, boom, it trades up. It gets a shift in structure. Do we want to grab it up here? Nope, we don't want to grab it up there. Why? Because it's still short-term expensive. And by using SMC, we can get more precise entries. So we want to wait for price to retrace back down into a discount marketplace, right? Discount marketplace. We do. It trades back below 50% equilibrium of that price range, and it also taps down into that bullish imbalance. So now we're backing down into a discount market where we can begin picking up, where we can begin buying. Okay, so it trades down into that imbalance. It does what? It comes down, it tests this previous swing level and yesterday's lows. It finds support off of that, literally to the pip, and then boom, it rockets up. Okay, so what was my PT? Oh, and also one more thing, I forgot to mark it, because you might be wondering that imbalance. Wait, let me get that off the chart real quick. See this? So that 4-hour imbalance wasn't completely closed in. That's what I had marked. That you here, let me remove this real quick as well, so just so we can see it a little bit cleaner. See that? It wasn't completely closed in, that little pocket right there. So we did have that little draw right there as well, right above our buy stops. So we took previous day's lows, we had that shift, boom, we had that up there as well, drawing on it. So my PT was, once it took out this high right here, okay? Once it took out these highs right here, that's what I wanted. These highs right here, right where we're entering that imbalance, okay? And we also have what else in there? We have 80. What's 80? What did I just tell you earlier? 80 is a institutional price level, so a level of resistance as well. And what do you know? It just beautiful. And also, as I've said a quadrillion times, the best plays do what? The best plays, they respect their levels quickly. They don't spend a lot of time. They usually, boom, touches it, it's off. Okay, that's exactly what happened. It came down, respected it, boom, and just aggressive buying, aggressive move to the upside for the sole intention to come up and attack those buy stops. Okay, and yep, so that was the reasoning behind that trade. Just, I mean, picture perfect, really beautiful follow through, and on both of them. So hopefully you found this useful. If you did, leave a like, subscribe to the channel. You can also join, again, you can join my free Discord chat if you want. Come in there, share your charts with us, share your ideas with us. And also I have my educational material in there as well that you can study from the YouTube and the blogs. So yeah, hopefully y'all have a blessed rest of the day, and I will catch you later.